Everyone, happy Thursday, November 21st. It's about 10:30 in the morning on the West Coast, and it's time for another market update. The last couple of weeks of, the volatility has settled down, which is always nice. Doesn't mean rates have gotten a lot lower, but at least we've settled down, post-election and things like that. So, going into this week, it's, not as much data, but some important data came out. So, going back to last Friday, we got the October retail sales. So this is, registering how much we're all spending in retail. And overall, it was a mixed report, but they did make a bunch of big positive revisions to September, and that, kind of hurt us. So, came in at about 0.4% month over month, which is slightly higher than expectations. The control group, which they take out, food services, gasoline, building materials, and autos, that actually came in a little bit lower than expected. So that was the mixed part. That was the positive part. But like I said, they made some positive revisions in September. This was actually plus 0.4 last month, and they revised it upwardly to 0.8. So in the month of September, especially, Americans, we were still spending too much more money. Like we talked about, this gets put into GDP. So the Fed's paying close attention to this. The more money we're spending, the better the economy looks. The less likely they are to cut rates. So that's why we kind of pay attention to that thing. But overall, mixed. But those negative or those positive revisions were not a good thing for us. Next thing we got October starts and permits. So this is builders. How many more homes are starting, they're completing, and permits drawn. Permits especially is our first look at kind of future inventory. And these are kind of, have been coming down overall. Permits ticked up slightly a month over a month, but are still down year over year. Completions were down month over month. So again, this is our first idea at future inventory. If the first thing a builder's going to do before they build an apartment or a house is pull permits. So we'd like to see those numbers tick up just to keep up with future demand. Or else the current housing situation we're in a lot of the country where there's just not enough housing will get actually worse if we're not building enough. So that's something to keep an eye on. And if we overlaid mortgage rates on top of this, you would see that a lot of this has to do with mortgage rates. The lower rates are, the more people are willing to build new projects. So we'll have to keep a close look on that, but it would be nice to see those start to tick up. One thing to say though, the NHAB, the Builders Association, actually is at I think their 7-month high in optimism. So they feel good about things going forward. Just right now, things were kind of slow. Next thing we got October existing home sales. This came out today and it was actually up 3.4% month over month, which brings us to our first annual gain or year over year since I think July 2021. So sales ticked up. You can see a medium sales price ticked up a little bit. A month supplies slightly down, and inventory slightly down. Still way elevated from these low points. But again, that's seasonal. We've talked about that before. People tend to list their homes this time of year. People stop listing their homes. No one wants to move in the winter, so it makes sense that we would see the uprise and then the drop down as we go into winter. But overall, it's a good thing to see. And again, like we've talked about, this is existing home sales in the month of October. So these are people most likely shopping in September when rates had come down before rates jumped up quite a bit again at the beginning of October. So lower rates equal more business, more sales, which was good for everybody: home buyers, sellers, and realtors and loan officers like myself. Next thing, initial jobless claims, always important. Keep an eye on the labor market. We know the Fed is. That came in again lower than expected, 213,000 new claims. 220 was the estimate. Continuing claims, rose again a little bit. But again, job market by all, by all reports is still going along pretty strong. So Fed's looking at that and saying, hey, the economy's great. Retail sales are high. Job claims are low. We don't need to cut rates. And that leads us to the next thing, miscellaneous. So there's been a lot of Fed speakers, including Fed Chair Powell last week, that basically their message is they're not in a rush now to cut rates. Because all those reasons, the economy still looks strong. So they're kind of trying to get people to think maybe, hey, they won't cut at their next meeting. I will say that is still about a 55% chance they do a quarter point cut, 45% chance they do nothing. But then that's been, the talking point from a lot of these Fed speakers is there's no rush right now, given how the economy is. Next thing, Ukraine. Generally, when there's a big global event, there's a flee to safety. So what that means is people take money out of more volatile things and put them into bonds, which usually helps mortgage rates and bonds and stuff, mortgage bonds, because they're safer. That happened a little bit this time, but not as much as normal. Maybe that's the markets not thinking it's going to be much of a change, with the use of new missiles by Ukraine and Russia's response and whatnot. So I guess if Russia does something serious in response, then you might see an improvement in mortgage rates for all the bad reasons. We don't want rates to come down because there's a World War III. And the next thing, rent versus own. This is a graph I wanted to show you guys. is the average net worth of a renter versus a homeowner. This one always stands out. It's always interesting to see the updated version. So we can see 2019 average renter in yellow at 7,300, average homeowner at 295,500. So 40 times. That went down a little bit in 2022, 10.4 to 396,200 at 38 times the net worth. Still gigantic difference. And now the most updated number, the average net worth for a renter is about $10,000. The average net worth for a homeowner is $415,000. That's 42 times. So it's gone up even the last couple of years with rates higher. So it just goes to show you, being a homeowner is a good thing. Even if you don't think it's a great time to get in the market, getting in there in 2022, you would, on average, your wealth would have gone up. So this is something for people on the fence currently to take a look at. The sooner you become a homeowner, the sooner you start building that wealth. And then, realtors, lenders, everybody, we have these clients that are on the fence, and looking at numbers like these is often eye-opening for them to see just how much a difference the wealth is when you're a homeowner compared to a renter. So I thought that was interesting, so I wanted to share that. Next thing, average 30-year conventional just ticked up a little bit. Like I said, things have been pretty calm as far as rates go. Still too high, still hanging around the 7 number, but not a lot of jumps up or down over the last week or two. So that's at 7.04 according to the average rate according to this lender survey. So across the country. Important dates. What do we got coming up next week? We have the day before Thanksgiving. We get a PCE. We get the Fed's favorite form of inflation. So that's a very important one to take a look at. And then the week after Thanksgiving, it's beginning December, we get all the jobs reports, including this BLS jobs report. That's going to be probably the most important one, how that looks compared to last month when it was lower, but there was hurricanes and strikes and things like that. So that'll be important to take a look at. And then on December 18th, we get the Fed's next decision. And like I said, right now the Fed's looking at or at least the markets are thinking about a 55-45 cut, no cut coin flip or so, a weighted coin flip, I would say. So fingers crossed that data comes in our favor and they do make a cut. So we need inflation down more than expected, and we need jobs not strong and maybe show some weakness. So if anybody needs anything at all, please don't hesitate to reach out. Otherwise, I hope you guys have a great week. Thanks a lot, guys.